Okay, very good afternoon here on the 13th of April 2018. My name is Rishi Patel, co-founder, Master of the Markets, the Elite Traders Conference, and the Traders Open Day. A very, very warm welcome to Forex Friday here on Friday the 13th. Unlucky for some, but not for the team at Master of the Markets. Based on the results that we received this week, we are up 2.86% in total over both trading rooms. We're plus 50 pips, representing a £500 net return. Let's assess the different trading opportunities that we did take during the week. I'm going to start by looking at the live trading room journal. As you know, everything here in the live trading room is done transparently, which means that as we're taking these trading opportunities on our own personal accounts, remember all of the service is purely for education purposes, but as we're taking these trades on our own personal accounts, we are of course going ahead and updating and implementing these trade opportunities on this journal just here. So that's basically what we're doing just there. We are going ahead and updating them. So let's have a look at the opportunities that we did take this week. I'm going to start by looking at the money bars. So Euro US dollar and dollar Swiss were two trade opportunities that did set up here for us on the 8th, and the 8th of course is the Sunday. So we entered these opportunities on the Sunday evening. We placed the actual trade orders. They were setups from Friday, so we don't actually enter the market on the Friday because of gapping. So we wait for the Sunday open and then we look to assess the market. Very important to do that just in case of gapping. You don't want to be gapped above or below a stop loss because then of course you'll lose more than you originally set out to do so, according to our method of risk management. So this is what our implementation is. We did enter the opportunities on the Sunday evening. We placed the pending orders, and of course they will have triggered the next day. So we are long on Euro US dollar. We were short on dollar Swiss. Let's have a look at how these both panned out for us. So first of all, let me show you the trade setups. So certainly here on the Euro US dollar, here is the PSWB on the money bars strategy. We entered the market long on the high. We placed a stop in on the low, and of course this quite neatly reached our profit target. Our profit target was 123.85, and again, you know, huge credit to the research team at Master of the Markets, because again, you know, another time we've proven that we know exactly how to position our target opportunities. You can see we clipped the high there, and then the market did fall off lower, and the market hasn't been back there since. So really we took our profit on that euro dollar at that level. It's exactly pure genius, but it's not luck, it is mathematics, and it's done scientifically. So we know what percentage of the time these PSWBs reach this particular price level, and this price level is not coincidental, it's not random, it's mathematically calculated. So we did hit target on this Euro US dollar just there on this money bars opportunity, and you can see that it did confirm the swing low for us as well. That low wasn't confirmed before. When we took the trade opportunity on this day, we entered the market, but you can see it was confirmed later on, and we did hit our profit target. Now the dollar Swiss on the other hand is not the same. We put our stop in on the high there, our entry was on the low. Here we're triggered in. You can see the swing high has not been confirmed, and this is very important to note because we also didn't reach our profit target on this dollar Swiss. However, we did make our first trail to the high of this bar, and then our final trail was to the high of this bar. This pattern we call a reversal primary, and that's a pattern of reversal. And so we trailed our stop on this day where this bar formed. We trailed our stop to the high here, and you can see the price did move through the stop, and we were out. But again, look, we capped the downside, and that's what we did in real time. We did this, we actually placed this in real time, and our members here in Live Trade Mentorship Advanced Vedanta Elite saw us do this. So we capped the loss on the dollar Swiss to 0.34%, still giving us a 0.75% upside and a 63 pip upside on the money bar strategy this week. So these were the two opportunities that we did take. Let's go ahead and look at the Liftoff. Only one trade opportunity really this week, and the Aussie dollar yesterday as well, which we've now cancelled today because it's invalid. But only one trade opportunity this week. It was on the dollar yen, and again it didn't work out for us. It didn't really give us much of a reason to, much of an opportunity to really move our stop and minimize our risk as well, which, you know, is what we'd like to do here ideally. I've always said in the past that I want to be able to minimize the downside as quickly as possible. So we entered the trade on this day just here. So we entered the trade, this is Monday. You can see we're clipped into the trade. In fact, this is Monday just here. And this is the next day, this is Tuesday. So on Tuesday, we are clipped into the trade on this pending order where this red line is. And the price immediately moves against us, almost towards our initial stop, but not quite. It does create, again, a reversal primary setup. So we do move our stop to the high of this bar. See, again, not giving us much of an opportunity to trail. And then the next day, we do see some downside. It looks as though it's going to move lower, but unfortunately, it moves higher. And today, it penetrates through our stop. So I have updated that as a losing trade here on the Liftoff strategy. Liftoff not really performing too well for us at the moment at the start of this year. 1.91% loss, but not bad for 3.5 months of losing trades. We are proving here that we are capping the downside, and that's really what's important here. It's not so much that we are taking as losses. Take a look and understand this. I mean, we only have a 27% reliability. Really, only 27% of the trades have won this year on Liftoff. But what you need to appreciate and realize about this system is look how it's capped the losses. It's really kept the losses very, very small. And that's why we've only received a net loss of minus 1.91% at this time. So that is not a bad result at all. And it's one trade that hits target that will turn this around and give us a positive equity curve on Liftoff as well. And it's very possible as well that we may get multiple trades like that setting up. You may get 2 or 3 of them that hit target at any given time. That's possible at any time. So we're just managing this. And of course, you can see we're still okay. We're within the risk parameters. We're within maximum drawdown. We know what the maximum drawdown is on Liftoff, so we know where to cut the trades off if they don't pan out. So that's absolutely fine. So we're down 76 pips, minus 0.89% on those opportunities just there. So the live trading room overall is down 13 pips, minus 13 pips, and also down minus 0.14% on the live trading room. Now, the elite room is really what's come to the rescue for us this week. An absolutely genius trade, an absolutely excellent trade here, following the plan precisely by the elite team. You can see it is a trade on gold bars. It's the only one we've received this week, and it was on the pound dollar. I've gone ahead and highlighted the exact levels here. Now, look at the trade opportunity, and I'm not going to go into the exact parameters because that's for the Vedanta Elite team in-house. But look at the exact trade parameters. We entered the trade on this outside bar just here. I'm going to pull open my drawing tool, and I'm going to just demonstrate exactly what's happened here on this trade. So we've actually placed the entry order on this dashed yellow line just here. It was a buy limit order because the market closed at this level. So when the market opened and fell lower, this buy limit would have been triggered. So this was a buy limit at this time. And we placed our stop, protective stop, on this red line. Again, this is not a random stop loss. This is mathematically calculated. And you can see that the price never reached the stop and actually went up to hit our profit target just here. And if you measure the risk, I'm just going to show you actually on the Elite Journal. If you measure the risk was 21 pips. Of downside, but the upside was 63 pips, and that's what it hit. It hit the profit target of 142.22, which is this price level here. So 142.22 was the level that it did reach. And again, that is absolutely pure genius. It hit it inside of a single day. The elite team there making 63 pips and 3% inside a single day, end of day swing trade. Superb work by the elite team just there. So we're bringing the Master of the Markets live trading rooms in total up 50 pips and up 2.86%, up £500 for the week thus far. So again, superb result. Fantastic trading all the way around, and the systems, mathematical systems here, quantified systems with key edges, are really proving themselves with the law of numbers that if we just keep executing them consistently, they will pan out. And you can see that as a very clear example here on the gold bar strategy on the Elite Journal, where we've taken 2 losing trades, then 1 winning trade of 3.74%, again 3 losing trades, and then another winning trade of 3%, actually bringing us up for the year so far, 1.74% on just one trading model. And of course there are 4 models on the Vedanta Elite team, on the Vedanta Elite room. 4 trading models with 1.74% being delivered by just one of them so far for the year. So we're very pleased with that. It proves that if you just keep trading consistently a plan that has a key edge in the market, that has a reason that it will continue working, then you can get net upside overall. So again, fantastic work on that side. And the topic for this week's Forex Friday is what to do when you make a mistake. So that's what I want to talk about, and I think this is a very important topic because this week, and the reason I want to talk about it is because this week we did make a mistake here in the live trading room. Of course, that was my responsibility, and I take full responsibility for it. I am accountable to that mistake. In this situation, the mistake did give us a positive result. But what should you do when you make a mistake when you're trading and you realize it? You should close the trade immediately. I mean, that's what we do here at Master the Markets. Again, this is not trade, this is not advice, because we don't give advice here, but this is purely for educational reasons, and understanding how I approach the market. What I will look to do is I will look to close my trade immediately as soon as I know that I have made a mistake. Now, in this circumstance, I did not know that I had made the mistake until the trade was closed and it was over. I actually only realized it 2 days ago, and so the trade had already hit its profit target. What was the mistake? Well, one of the key criteria really on the Euro US dollar money bars opportunities that we take here on the money bars trading model is that we need what we call an English channel, and the English channel is a very, very powerful filter which helps us to narrow down the number of trades that we're taking. As you can see on the money bars trades, we've only taken 4 trades this year. That's 1 a month. It's a very low frequency, but that's because the filter is very strong. And the filter being very strong is a very important thing for us. You see, what we need to realize, what we need to understand, is the fact that we are only taking very specific trades, and the English channel setup was not satisfied here on the euro dollar. But when I did my analysis, I overlooked a key criteria. In fact, I thought that this setup here constituted an English channel, but actually it did not constitute an English channel. It was an invalid setup, and I actually got that incorrect. We didn't have the criteria that were required to take the euro dollar trade. We did not have those criteria in place. So what does that mean? It means that we shouldn't have taken the trade, and we shouldn't have taken the trade, but we took it anyway. It did result in a net profit using the trading model, using the target setting mechanism. It did realize a net profit. What was the net profit on that particular opportunity? In fact, it was 1.08%, 90 pips of upside. But technically speaking, we shouldn't have taken it, and I only realized this a few days after when I looked back at the trade setup. So what I've done, because we want to be accountable and because this is a very transparent, an honest model of how trading is actually working, what I've done is I've removed the trade of the euro US dollar. I've removed it from the system tab, so I've only kept it on the cash tab, and this is how we can log mistakes that we make. So what you can see here is that the money bar system, technically speaking, is only up 3.63% this year, or 198 pips, but the one trades that we actually took, even though they were against the system, is up 251 pips and 3.95% for the year so far. So you can see the difference just there. And we are logging on the live trading, we are logging the cash against the system. And you can see just here that initially at the beginning of the year, because of a mistake that we made on the cash curve, our system curve was actually much higher than where our cash curve was. So our cash curve had only realized 3% at that time, and the system curve was up 3.71. But then, given this mistake, the fact that we've made a positive mistake, our cash curve has now taken over, and we've got a 2.1% profit instead of a 1.72% profit this year so far on system. So you can see that our cash is actually excelling our system. That generally only tends to happen when traders become even better than the trading system. It can only happen over a period of experience, but in this particular case it didn't happen because of experience, but because of a positive mistake that was made. So we have logged that, and you can see that I'm monitoring the cash and the system curves separately, and this is something important that you can do. If you have a consistent quantified system, you're able to do this, so you can measure your own trading performance against that curve just there. So I trust that that's added value. You can leave any comments for us in the boxes on the comment box below. If you have any questions, we'll be more than happy to answer them. Until the next time, stay disciplined, follow your plan, and trade like a master. Bye for now.